Good morning, everyone. So, you heard today about all the new energies and the new technologies that are going to be needed to support aviation net zero commitment, including here the upscale of sustainable aviation fuels, the development of hydrogen aircraft, carbon capture, etc. So, the natural follow-up question is, how are we going to fund all of this? And this is where the financial sector has a crucial role to play. And the financial sector is the one that is going to provide the funds to actually accelerate the sustainability transition. However, in turn, the financial sector is aligning its portfolios with climate goals, and they have their own sustainability targets to meet. Therefore, we see the financial community considering more and more in their investment decisions the sustainability performance of their investments and in their projects. And this is what sustainable finance actually is accounting for sustainability factors, which are actually known as environment, social, and government factors, when they make their investment decisions. And as any other business, airlines, if they would like to actually access sustainable finance, they have to make sure that they're generating the trust and they're showing that and disclosing their ESG performance. And this goes beyond tackling CO2 emissions to other sustainability areas. However, we have a challenge. And businesses wishing to report and disclose an ESG report, they face a very fragmented sustainability reporting landscape. And it is ever increasing and is not aligned. So there is a lack of credible and consistent data for the financial community to take their investment decisions. And a number of actors have actually stepped in. A number of stakeholders are trying to solve this problem. So we see international commitment and conventions such as the Paris Agreement, Sustainable Development Goals. And in this context, we see a rise of some binding initiatives and regulations such as the European taxonomy. We see the Securities and Exchange Commission climate-related disclosures. And we also see important reporting frameworks, such as the Global Reporting Initiative, GRI, the Greenhouse Protocol, the GEG Protocol, as well as the Task Force on Climate-Related Financial Disclosures. We also have other work under progress, but very important international initiatives, such as the International Sustainability Standards Board. Now, if you feel overwhelmed by this slide and by all of this, you're not alone. Actually, businesses feel very much overwhelmed, and airlines too. So we had this lack of data, and we see that all of these initiatives are actually not filling this gap. Instead, they have created a patchwork of requirements that are fragmented, not only from a mandatory disclosure for governments, but also from voluntary parts, such as from banks, from lessors, from ESG rating agencies. And all of these initiatives tend to look for the same outcomes, but they use different methodologies and they require different data points. So it is quite difficult for airlines right now to know really what to report on. And this becomes even more challenging when you take into account the global nature of aviation. So this fragmentation really does not help. And we all know that aviation is also a technically complex challenge. So all of these frameworks are also not designed specifically for aviation. Well, we have some good news, and the good news is that we're working on it. So we are actually, at the request of the IATA member airlines, we're working together with them to actually come up with common and aviation-specific ESG metrics. The goal of our work and the best practice that we're going to publish at IATA.org by beginning of 2023 is to actually provide guidance for coherent, consistent, and comparable airline-specific ESG metrics across the industry. So really, this will be a key tool to generate the trust that is needed in aviation's efforts to tackle the carbon emissions and to reach net zero and also become more sustainable, and hopefully also allow to enhance the access to sustainable finance. So the metrics, so the ESG aviation-specific metrics, are a result of, firstly, a review of the airline ESG reporting, and also mapped against the requirements of around 20 frameworks and initiatives, together with the feedback and comments from the airlines. So these metrics are based on recognized international standards. And it's important to note here that this is very much of a living document. So it was not built in a bubble. We work together with airlines, with regulators, and we engage extensively with the most important ones. And this document will be regularly updated. It will be adjusted to meet any evolving challenges and amended as needed. So I know all of this looks a bit theoretical, so to close this presentation, I would just like to take an example. So we have identified 31 ESG metrics for this version of the document, and one of them is carbon offsets. Now, when an airline would like to report carbon offsets that they have purchased, they're in front of a number of options to report these carbon offsets. One option would be for an airline to report carbon offsets depending on the time of the carbon offsetting program. So there are a number of robust programs that generate high-quality carbon offsets, such as Gold Standard, Vera, VCS. Another option for an airline would be to report carbon offsets based on the project type. This could be renewable energies, efficient cook stoves, forestry, avoidance projects. So there's a number of options out there, and we saw a clear need to define the most useful metric that can convey the valuable information to the financial community in a consistent way. And this is why, based on the airlines and the framework feedback, and working really closely with our members, we recommend that the airlines report carbon offsets in terms of carbon emission reductions in metric tons, and using 3 separate metrics: mandatory, voluntary purchased by an airline, and voluntary purchased by the customers. So this categorization conveys the useful and the valuable information that the financial community needs, because it defines clearly which carbon offset would purchased by an airline to meet a mandatory obligation, such as the EU ETS or CORSIA, and which carbon offsets were purchased in a voluntary basis, be it by an airline and by a customer. So to close, I would just like to say that we call it today sustainable finance, but in the future it will be just called finance. Thank you.
Great, thank you very much. And I think also for the people in this room, having this consistent way of reporting for the airlines to report will also help you to more easily follow the industry's progress. So I hope that's good news for all. With that, we've got a few minutes for questions. So we've got a great panel up here of speakers. So who wants to ask the first question? We'll go to the back of the room. Maybe Christine first? Yes, perfect.
I have just a quick question for Emmy. That is there a reason why the airlines would go to the extra trouble of going for the ESG financing? Is there a benefit to getting that pool of money as opposed to any other kind of financing from the financial world?
Well, in order to reach the aviation net zero commitments, I think, and to show all the sustainability performance and all the good work that aviation is doing, it would be very useful to reach there. And as I mentioned, we call it sustainable finance today, but it will just be business as usual in the future. So the financial sector is really taking. We see an evolution of this, and we understand that it's not in every part of the world that sustainable finance is really in the same levels of development. But this is where the future will be. So again, finance today is not what will be in the future. So it's not that you can actually choose between the different finances. This is where the financial sector is evolving. And the financial sector is considering more and more the sustainable performance indicators. And this is why aviation has to be ready in the forefront of this work, to really be ready to make use of all the opportunities that are going to be offered.
Yeah. So to be clear, if I'm an airline and I want to get a loan to do something that's ESG related, it's either go through an ESG, get an ESG loan, or get no money at all. In other words, it's not like I can just go get a loan elsewhere. Mm-hmm. Is there an incentive for getting ESG money, or is the incentive that that's the only money you're going to get?
Well, at the moment, so we do see variety, a variety of different financing options. So we see business as usual in some areas, and we also see this move towards sustainable finance, which could be called differently. Let's call it ESG investing or taking into consideration the performance. Now, the way the ESG investing is being done, there are different ways. So sometimes actually taking into consideration sustainability-linked investing or green investing, depending on the use of proceeds in this case. Sometimes it means that your rates are better if you're performing better from an environmental perspective. Sometimes it means if you're not performing better, if you're not performing to the level that you have reached an agreement with, then your rate will go up. So there's different ways that the financial community is actually looking at this. And the way it's going to, what we see is an evolution. If in the beginning, if many years ago, the financial community was only looking at profits, we see an evolution towards first, maybe some exclusionary investments. So for example, not investing in the tobacco industry, on the weapons industry. And now we're evolving more and more into what is called impact investing. So we see the number, if you track each year, the number of investments that are done in each of these categories, we see an evolution really to include more and more ESG performance in all financing. And this is why I said today we call it sustainable finance, but in the future it will be just business as usual.
Yeah. Willie, maybe I can call on you. When you were in an airline, you were looking for finance. How important was this?
Yeah, there are in effect two pathways available today. You can pursue, if you like, green financing, or you can pursue what we would describe as business as usual or normal financing. But I think Emmy's point is quite right. Going forward, these two will merge, and financing will be dependent not just on the asset that you're trying to finance, but it will be dependent on your sustainability performance as well. So I think we are evolving to business as usual, which will present or require much greater focus on your sustainability track record and performance to enable you to access any form of financing. At what point that becomes the norm, I'm not so sure, but we are certainly in a market that is evolving. So today, two options. Going forward, it will be a single option.
Great, thank you. Question just behind, and then we'll come to the front.
Yes, Eric Renet, newspaper Le Soir in Belgium. I'm surprised that there is no clear goal for a price of SAF in your projection. You have to have a rentability price for using it. And the second one is, I'm also surprised that you don't clearly project what will be the reaction of the market in 10 years if industrial hydrogen is still so low price than the green hydrogen. What will the airlines do? And in the same way, the oil producer will try to give jet fuel cheaper and cheaper to avoid this concurrence.
Yeah, so I think, thanks for the question. In terms of the price of SAF, indeed, we didn't put up a projection. I think it'd be difficult to do that. Right now, as you probably know, compared to conventional jet, the price of SAF could be up to 5 times, between 3 and 5 times. So there's quite a big difference in terms of price today. But the biggest problem we have in that is we don't actually have a market for SAF supply, for SAF suppliers. So once we get new entrants and more companies involved in the supply of SAF, including some of the big companies, then we have a market which starts to function. And that has to drive down the price itself. So once we have a functioning market, then there's more opportunity to drive down the price, which we should see coming in between now and 2030 for sure. Because when we looked at how many new producers there'll be, we can see that we get over this threshold of just having a handful of SAF producers, and we actually have quite a big, reasonable distribution to actually have a functioning market. In terms of hydrogen, yes, indeed, there's a similar sort of situation, but there's limitations as to how hydrogen can be distributed and available as a global energy source itself. So it's difficult to actually understand right now. Right now, hydrogen is produced and used more in local basis. So once we have more of a functioning market, I think that's what will drive that aspect. But again, as I explained earlier, it's really about the renewable energy which is used to actually create the hydrogen itself, which will drive the price. That's 85% of the price determinant.
There's another important issue in relation to SAF. When you look at the price of SAF, you can't look at it in isolation. You also have to look at the cost of carbon. So as we've seen in the EU, we have ETS for airlines. So all flying within Europe is covered by the EU ETS. And going forward, there will be the cost of carbon associated with international flying as well. So when we look at SAF, clearly embedded in the price of SAF is a reduction in carbon. So it's not just looking at it, you've got to factor in what is the alternative, which would be price of jet plus the price of carbon on top of that. So the differential that we look at is the embedded cost of kerosene or jet, which would include the cost of carbon as well. The other important aspect with regard to SAF, which we think is important for the industry, going forward, we see less volatility in the price of SAF. So we have significant volatility in oil prices today, both in the context of the crude price and in the jet price, and you heard me talk yesterday about even the volatility in the crack spread. SAF will remove a lot of that volatility, which provides greater ability for the industry in terms of their forecasting and pricing models. So there are actually significant positives associated with the transition away from traditional jet to SAF. And this is clearly something that the industry will be factoring in as well. In relation to hydrogen, my comments were yesterday and earlier today, we're not factoring in widespread availability of hydrogen for the industry in terms of our transition to net zero in 2050, for the very reason that you've outlined. There's still a lack of clarity around when wide-scale availability of green hydrogen will be in the market. So as Hemant has said, there's projections in terms of green hydrogen, but where we are in terms of production of green hydrogen today and where we need to get to, there's a very significant gap.
Okay, great. We'll move to the front of the room. Yeah, and then you.
Hi. So two questions. One is, for example, I'm from India, so Indian government is also looking at mandating a certain percentage of blending going forward. How do you see such kind of regulations coming in from government, especially when, like Willie mentioned yesterday, that there is not much availability? So in light of that, such regulations can become counterproductive. The other point is, like we've seen in the US, there has been a recent legislation regarding a tax rebate on usage of sustainable aviation fuel. So how can such measures really help in adaptability towards SAF?
Yeah, so it's an interesting point about India, and so I've heard also about the desire to introduce mandates. I think it's very much a draft proposal right now, but also we've talked to the Indian government, and there's an interest to think broader, and potentially, and importantly, about also considering how SAF feedstock development can actually be sourced in India itself, and the production can actually be facilitated in the local environment as well. So there's certain opportunities for India, and I think this is actually a story for SAF overall, in that there are feedstocks and so on which are particular to different regions, which can be capitalized by that region or by that country as well. And it's a great opportunity to diversify and use the resources which are available in different geographies. And India is particularly capable of leveraging that capability. So I know they are going to look at it. And the way to have a more balanced approach is to have a series of incentives which can best facilitate that feedstock generation and that production, which is more specific for the Indian environment. And then, when there is an opportunity to see that there is a supply available in terms of SAF, then there is an opportunity maybe to balance that out with mandates. But first of all, we have to really think about the right incentive schemes. And that's where the tax credit comes in, for example. It's just one example of what could be done to facilitate SAF production and to diversify feedstock and to diversify pathways. That is where we need the focus to be at this stage. Mandates by themselves will not solve the problem. What they will do is to constrain basically what is a limited supply of SAF right now based on primarily one pathway solution. So we need governments to think broader. We need governments to think on a longer term objective and to really understand the dynamics of creating a workable, sustainable SAF market.
And this issue of mandates is very important. So we have a situation in France at the moment where there's a mandate for 1% of SAF. But if the supplier doesn't fulfill the mandate, in other words, doesn't supply the 1%, there's a charge. And from memory, I think it's, anyway, it's a significant charge. So what the suppliers are doing is say, well, we'll just charge. We won't source the SAF, we'll just charge. And they're passing that charge on to the airlines. There's zero environmental benefit for that. All this is just generating more revenues for somebody in the supply chain other than the airlines, because ultimately the airlines are paying for it. So looking at this concept of mandates, you have to make sure that the objective is to drive a genuine environmental performance. If your objective is to generate revenues, well, then be honest about it. You know, you're not doing it for environmental purposes. And what we see in some cases is mandates being introduced in the name of environmental progress, but not actually generating any environmental benefit. And France is a perfect example of that. You know, they probably felt that requiring a 1% SAF mandate was a positive development, but when they provide the alternative, which is if you don't actually meet the mandate, you just pay a higher price. The suppliers just say, we'll just pay the higher price because we know we can pass that higher price on directly to the airlines and they're going to have to deal with it. That's not going to achieve environmental benefits.
Okay, great, thank you. Chris, you had a question? Over here.
Thanks. Chris Jasper, Bloomberg. Can I just ask about your 2030 tipping point, Hemant? Do you mean a tipping point in the sense that it becomes almost inevitable that you will reach that target, or is it really just more of a waypoint that you're targeting to have any chance of reaching the 2050 goal? Because I know you said that there needs to be a 4,500 times scaling up, which does seem huge, and you said if we reach that 2030 tipping point, it'll only be 15 times required. But then again, that 15 times is the vast bulk of what's still needed by definition, isn't it?
Yeah.
So what sort of tipping point is it? Is it really just a target that you've come up with, or is there something more behind that number?
Thank you for that, Chris. Yeah, so it's based on our strategy. It's based on our Waypoint 2050 strategy, and this is where we saw, you know, because you're starting from such a low volume of SAF, we need to have a scale up, which is getting to a point where we've got a significant portion of SAF being used in terms of overall uplift. And that is where the tipping point is. So we need that scale up to the point, and which is for 2030, which is the 30 billion litres itself. And then, as you said, it is large volumes which need to be increased 15-fold, but you have 2 decades to actually do that itself. But you know, we need that. It's almost like the ramp up has to happen between now and 2030. That is really the key effort that needs to happen. And that's work that needs to be done with the airlines, of course, but together with the suppliers, but it does need government support for the right policies.
Okay, we'll come over here. Question, yeah, with Christopher?
Thank you. Actually, continuing on that point of government support, we've talked about the mandates, we've talked about tax credits. Is that really it? Are those the only tools in the, in the policymakers' toolbox to get to your 2030 target? And a second question, perhaps for Emmy. They talk about $1.6 trillion needed to invest in SAF between now and 2050. To what extent does the finance investment community play a part in, putting forward the funds towards helping to reach this?
So to answer your first point, in terms of incentives, no, I think the ones given so far are examples. There's actually a list of different types of incentives which have been rolled out. For example, through the US Inflation Reduction Act, and they include incentives for production facility development, and they can be in terms of facilitating finance. They could be, for example, in terms of depreciation cycles and various other aspects which would allow an easier solution to put the facilities in. There could also be incentives for research and development into the new pathways to provide earlier maturity to the pathways. And that diversification is really important in aviation. So I can provide you with a list of all, we do actually have a write-up on that, and I can provide you with a list of all the different incentives which have been used.
Yes. So I do believe that they do will have a crucial role to play, as I mentioned, and this is for a number of reasons. First of all, we see the financial sector really aligning their portfolios, their investment and financing portfolios with their own climate goals. So the financial sector have their own sustainability goals and targets to meet. And when the financial sector is looking usually to also manage their risks and to make sure that to manage all the risks that can impact the value of their investments and their businesses. And these are reasons and drivers that we see that financial community and the financial sector will actually be looking into this sort of investments such as SAF.
Okay, Bruno?
Bruno Trevidic, Les Echos. I still really wonder how you will conciliate this continual increase of cost for the airlines, SAF, carbon price, new aircraft, and the ability for customers to fly, to be able to pay for a ticket. And so my questions would be, at what stage do you believe that the continual increase of price would be stopped, or the continual increase of cost? At what point do you believe that the airlines will recover its business model based on democratization and continual growth?
Yeah, it's a great question. Yeah, and that's why I've been very clear that the transition to net zero will cost money, and there is no option but for airlines to pass that cost on to consumers. We see that could, and indeed, will have an impact on demand. Mari mentioned yesterday about the price elasticity in the airline industry. And that's why we've got to go into this with our eyes open. I think there are people who believe that you can transition to net zero at zero cost. I don't agree with that. I think there is going to be a cost. Longer term, you could argue that the cost of sustainable aviation fuel will be on a par with the cost of jet. Some people argue that actually the cost of sustainable fuel will be lower than the cost of jet. I don't buy into that myself, but I can see a credible argument that you can make that you could have sustainable fuel production with lower costs than you will have for the production of current jet fuel. But I think we've got to be honest with people. There is a cost associated with this, and consumers are ultimately going to have to bear that cost. And yes, that will have an impact on demand, as we've seen, but we have factored that into our growth plans over the years. So the chart that Hemant showed you with the emissions at almost 1.8 billion tons, that was a business as usual forecast looking at all of these impacts. What would the emissions of the industry be if we didn't do anything? And clearly we've got to bring that gross emissions down from 1.8 to net zero in 2050 through the various means identified in the chart. But there will be a cost.
Okay, we'll slowly work our way around the room. So next question at the next table.
And a question for Hemant. Willie, yesterday you reiterated your position on environmental taxes. You're opposed to them for long-haul flights out of Europe. The alternative to that is that the burden for the European environmental taxes falls heavily on those airlines that do not operate long-haul, which would be Ryanair, EasyJet, Wizz, and the ERA members. What is your overall position on environmental taxes when the burden is falling unfairly, as these airlines would argue, on those airlines that just operate within Europe, whereas the long haulers don't pay a proportional amount? The question for Hemant is, the three most famous words probably in the history of aviation journalism are "Oh, the humanity." And it's from the 1937 Hindenburg disaster. There is a huge problem delivering the notion of hydrogen as a fuel to in an industry where safety is so much at the core of everything that IATA and its members do. How do you, in a soundbite or two, do you intend overcoming that? And is the timescale for hydrogen realistic, given that huge public perception from an event, perhaps for the centenary of the Hindenburg disaster in 1937? First of all, Willie, thank you.
Yeah, well, let me address the second one as well and let Hemant respond in a moment. But EASA has been very clear that the safety standards that apply today will also have to apply to hydrogen. So hydrogen will not be used in the industry unless we can assure everybody that the current level of safety will be maintained. There will be no change in the safety approach of the industry to facilitate hydrogen, if you want to put it that way. I didn't actually make the comment you attributed to me yesterday on. I objected to all environmental taxes. I wasn't specific around whether they applied to one form of flying or another. And my view is environmental taxes don't achieve anything. You know, if you look at Europe, Europe has I think a particular view that isn't necessarily shared by the rest of the world, in that there are politicians in Europe who believe that the solution here is to make flying so expensive that nobody can fly in Europe. And they believe that part of the solution therefore would be to apply taxes and additional charges so that ticket prices become so expensive that the number of flights being operated will reduce. That's a widely held and public view expressed by many politicians in Europe. That view is not shared when you move around the world. In fact, quite the opposite in many regions of the world, where we meet with politicians and regulators and they're begging us to provide additional flying. So Europe is taking for granted what it has and believes that the transition to net zero is not appropriate, and therefore want to pursue other methods as well. So I don't have I'm opposed to all environmental taxes simply because it's a lie. Taxation does not achieve environmental objectives. They are easy for politicians to introduce. Somebody said there's nothing more permanent than a temporary tax. So when you introduce these taxes in the name of the environment, they are not environmental taxes. They're just tax-raising, revenue-raising schemes and don't have an environmental objective. So taxation, if you look at what happens with taxation, it means that some people get priced out of the market. They don't fly. The flight still operates, but it just operates with fewer people on it. That is not environmentally sustainable. That's not achieving anything. And politicians need to be honest when they say that what we're trying to do is we're trying to make, in the case of Europe certainly, we're trying to make flying the preserve of the rich. And we don't believe that the benefit that has come from The huge change in aviation with the advent of low-cost carriers like Ryanair, who have restructured the industry and brought the option of flying to millions of people that otherwise wouldn't have been able to fly, that actually is a benefit that we should ignore. I fundamentally disagree, and I fundamentally disagree with any form of taxation in the name of the environment, because not a single penny has been demonstrated to go for environmental purposes, and there's very little of any evidence that it has an environmental benefit. Taxes on roads, taxes on petrol, they haven't stopped emissions from road transport. And road transport, as everybody knows, is significantly greater in Europe than air transport. So these taxes don't work, and that's why we're saying that the way forward, if your objective is to improve the environment, the way forward is to support that transition through policy frameworks that will facilitate greater production of sustainable aviation fuel, so that we can genuinely continue to have the economic benefit of aviation while addressing the environmental impact that we have.
Thanks, Willie. Yeah, and just building on what Willie said on the first part of that, yeah, indeed, I think we have to be realistic that we're looking really at, in terms of looking at hydrogen in liquid form on aviation, we're really at the research, some trials stage. We're not really at the demonstration stage, and it would take some time before we ever get to anywhere near the certification stage and the airworthiness approval. We have to use the same belts and braces, clear approach we have right now in the ensuring the aviation system safety is actually rigorous and maintained exactly as it is, and that will take time.
Great. Who wants to ask the next question? Maybe here in front.
Hi, Juliana from Broadcast Brazil. Talking about safety, some airlines are demonstrating doubts about the safety of engines running 100% SAF by 2030. Is that actually a risk?
No. It will only be approved if the safety standards can be maintained. There will be no compromise on safety standards to facilitate these initiatives. So today, engines are running on a 50% blend, no issues. They have already tested engines on 100% SAF. It may be that some very old engines will not be approved for 100%, and that could create some challenges, because you're not going to, beyond 2030, get a situation where airports will have a 50% blend of SAF and 100% SAF. It's going to be whatever the blend is, which may mean that certain aircraft with engine combinations that are very old will not be able to operate at certain airports where only the 100% SAF is made available. But there's not going to be any compromise on the safety standards that we have, and certification will solely depend on being able to meet current safety standards.
Great. We're coming back to the last sort of 4 minutes, so we'll take 1, 2, 3 questions in that order, starting here.
Freelance from Hamburg. Hammond, you mentioned small aircraft development for hydrogen hybrid propulsion. And it's quite interesting, the development, especially focusing on small aircraft 19-seater plus. From your point of observation, who in Europe is leading on that? I heard, for instance, that Norway is advancing that project with Widerøe, for instance.
Yeah.
Do you see that as a realistic goal, that they can become the pioneers actually in 2030?
Yeah, I think these are the applications which will be looked at. So where you have short feeder routes, that there could be an area which is looked at, or going outside Europe, for example, in New Zealand and so on. There are opportunities there for that type of network, where this type of application using fuel cell technology provides the right sort of propulsion solution.
Okay, great. Next question to Dina.
Hi, good morning. Dina Kamel from the National in Abu Dhabi. A question for each of the speakers, please. So Hemant, just to go through your presentation on the energy transition, and if we can drill down on that by region. You mentioned that looking at the renewables projects across the world, there was uneven distribution, with most of it skewed towards Europe and North America. If we were to look towards the Middle East, where countries like the UAE have announced their intentions for the development of green hydrogen, where the likes of Abu Dhabi, for example, have talked about the development of more feedstock for use in aviation. Can you give us your assessment of the Middle East region's performance towards the energy transition in aviation vis-a-vis the global peers? And then a question for Emmy on green financing. We've had the likes of Etihad Airways in Abu Dhabi announce things like, what they touted at the time as their first ever green sukuk, so the Islamic bonds tied to their ESG performances. How long before we can see something like this become the norm in the region? So if somebody like, a giant like Emirates Airlines were to go for conventional financing, I don't see them being turned down for that. So how far before green financing becomes the norm there? And finally, a question for Willie on, you're talking about the cost of sustainability being passed on to the consumer, that becoming a big cost as well for the airlines. Is there some kind of price tag that you might attach to the cost of sustainability?
Okay, that's a lot. Actually, the questions took the last 2 minutes of the session, but we'll try and get through them with very short form answers.
Indeed. So I think you're absolutely right. The chart I showed, we need to, and we're starting some work to actually look at it, how it would vary by region as well. And when it comes to SAF, what are the solutions? And because they are going to be regionally diverse. And so for the Middle East, we can expect that there'd be more focus going forward in terms of the use of solar energy as a green input, but also in terms of feedstock, maybe I know there's a lot of interest in terms of municipal waste and some other feedstock opportunities which are looked into. So this is really something we want to start to chart and show and basically track, so everyone can see how this all develops across the regions.
Okay, Emmy, very quickly, your response?
Yes, so yes, we actually have worked closely also with Etihad to actually understand what were the specificities of those agreements. And I think how long, of course it's a difficult question, but I do believe, as mentioned also in my presentation, that we have this global challenge of sustainability reporting fragmentation. So it will take as long as needed at first to create the basis of credible and consistent data for the financial community. Once we have this very important framework and foundation, then this can go further. Because at the moment we do not have that.
And no, I don't have a figure. It's far too early. But that's something that we will be developing as we go through this.